All right, welcome everyone to our Spark Tax event with our friends at TaxAct. My name is Jalen Vasquez. I'm the director of Freelancers Hub. We're a co-working space in Brooklyn that's operated by the Freelancers Union and MOME, the Mayor's Office of Media and Entertainment. Some of you may have attended a Spark event with us in the past before. We've had a little bit of a hiatus, but for newcomers asking what is Spark, Spark is the Freelancers Union's monthly member meetup for all freelancers to meet, mingle, and learn more about topics that apply to them and to improve their business. In the past, we've covered building your small business, growing client bases, the power of storytelling, negotiating rates and contracts, client management, communication, and so much more. Like I said, we're kind of starting things up back again with Spark. This is our first one back. It's a nationwide event. Figured why not start out with a bang with taxes. Our next event will be a networking happy hour that's in various cities nationwide in April. The link to sign up if you're interested in having a Spark near you is in the description down below on YouTube. So definitely check that out, fill out the survey. It takes about 2 minutes or so. But also if you're signed up for the newsletter for the Freelancers Union, that will also alert you to all the events that we have coming up scheduled. So complete the form if you're interested, or if you have any questions, we're here to help you, and we'd love to get a Spark in your city. So it's that time of year. It's the dreadful tax season. Many of you are worried, not knowing how much to pay, what you can write off. Hopefully by the end of today, you'll have most of those questions answered about freelance taxes. Before we start, I will say that we will have time at the end for a live Q&A in the chat. We did receive your questions through the sign-up page. We went through them to see what were the most frequently asked questions. So we will be addressing those. If you didn't see your question answered, feel free to utilize the chat, and we will get to it at the end. We'll try to get to as many as we can with the allotted time we have. But if you do have any further questions, you can email us directly, either at advocacy@freelancersunion.org. I'll put that in the chat below as well. This event, as I mentioned, is partnered with our friends by TaxAct. So they're very nice enough to also have a discount code for our members, as well as different resources that you can check out on our Tax Center tab. Both of those links are in the description below. Hit those links, get the discount, read up on all tax changes coming up for the year. It may apply to you, it may not, but you always want to be prepared. So we have an amazing speaker with us today. You may remember him from last year if you attended last year. We are joined today by Mr. Mark Jaeger. Very happy to have him here with us. Mark is the VP of Tax Operations at TaxAct. He's a veteran within the space, leading his team to make the tax code easier to understand for everybody. His goal is to help ambitious Americans work the current tax code to their advantage by creating various TaxAct products as a trusted resource for insider knowledge and exclusive tax secrets once reserved for the wealthy. So welcome, Mark. How are you today? How's it going?
Oh, doing very well. Doing very well. Thank you. Thank you for having me.
Thank you for taking time of your day to do this. I mean, with freelance taxes, it's always a tricky thing. People are nervous. People are afraid that they're paying too much or they're not know what to write off. So we're very happy to give us some tips and talk all about taxes. So we're going to bring up your presentation. Awesome.
All right. Sounds great. Thanks, Jalen. So, hey, freelancers, happy to be here. Happy to talk taxes with you all. Kind of as Jalen mentioned, we're going to go through a few items. Obviously, I'll introduce myself once again, give you a little background about TaxAct, go through some of the offers that we have for you around our Expert Assist and the discount and the product in general. We'll talk about, obviously, your questions and provide some information around the Tax Resource Center. And then we'll open it up for even more questions at the end of this. So should be a fun topic today. So first and foremost, you guys can see my screenshot there. I took this screenshot pre-COVID. So the tax law changes after COVID happened. We all know stimulus changes, all that. Definitely caused a lot of problems at the IRS and with the state agencies. And I joined along with them through all of that. So my picture has probably aged 10 years since this last screenshot overall. But nonetheless, it's a great job. I get to work with the TaxAct team that implements the tax code changes on a year-to-year basis. I get to work closely with the IRS, closely with state government agencies to really talk through what their tax law changes are going to be this year, and then really how it's going to impact all you, and making sure that as we implement those changes, things are going according to plan versus confusion as it relates to those changes overall. So to talk a little bit more about TaxAct, this is what I like to call the old McDonald's sign, right? Where McDonald's talks about the number of customers served in the billions. Well, we're not that high, but nonetheless, we have served 90 million tax filers through all sorts of different complexities. And obviously, one of the most complex returns you can have is being a freelancer overall. So again, no matter what your tax bracket, we feel like everybody could use TaxAct to do their taxes and be empowered to do it themselves. And then just things that we offer to help file with confidence. One is just a maximum tax refund guarantee. Wow, that's a lot of words to say that rhyme right then and there. So really, we just want to ensure that when you go and file, we're giving you what your maximum refund should be each and every year. We want to make things easy to import, whether that's through your payroll provider, 1099 documents, etc. If something does happen, right, because there's always late-breaking tax law changes and things that can throw off the software overall, but we back up what we do each and every year with a $100,000 accuracy guarantee to make sure that our calculations are accurate. And then really, almost most importantly, is just your data privacy and security. Like that is very, very core and near and dear to us, that, hey, you're trusting us with your sensitive information, and we're putting in all the safeguards to make sure that it's secure year after year. To talk a little bit about the partnership overall, again, we've been doing this now for 3 years, right? Again, it feels like time flies, but yeah, 3 years now have ultimately passed while doing this. And we do have a 25% off state and federal filing offering that's out there. You will go to the Tax Resource Center that Jalen mentioned that's on the screen here, where you can ultimately access a link to that 25% off offer. I will touch on free expert assist here in a minute, but we also do have a bunch of content that we'll provide around what freelancers should know, which we'll also discuss in a few slides ahead. So to talk about free expert assist, guys, like I'm here, I'm happy to talk to you all about the tax law changes, about things you need to know as a freelancer. But we actually hire CPAs and EAs that you can talk to when doing your taxes for free. Like these folks are way, way, way ahead of me as it relates to all the nitty-gritty tax law changes each and every year, because that's their job. They want to make sure that they're deep into the details and they're able to answer any questions that any of our customers ultimately have. So I strongly, strongly urge you, right, if you do go in to file your taxes with TaxAct with that 25% offering, take full advantage of being able to talk to a CPA or EA while sitting on your phone, at home in front of your computer, whatever it may be, that you don't need to go to the store or to a CPA firm to actually talk to somebody. You can talk to them right over the phone. So it's a great way to understand more about taxes in general, about the type of expenses and deductions that you can claim on your returns, things along that line. So having free, right? I'm saying that word again, free access to CPAs and EAs, it's really huge. One more time, the Tax Resource Center, just to show you a few examples that are out there, right? We try to make this specific because everybody's coming into the freelancing, right, work at different time periods. Some people, this is their first year. Some people have been doing it for 8, 9, 10 years, right? So the content needs to be different between each one of you and kind of where you're at in your journey overall. And that's what this Tax Resource Center does. We hear the questions that you all have. We know and help provide information that's helpful to each person along their journey in regards to doing kind of being their own boss, doing the work themselves in a way. So this information is here for you to check out anytime and even download some information as it relates to this content overall. Okay, so we're through all that. I appreciate everybody still sticking around as we just kind of talk through that beginning information. Now we really want to jump into really what you should know in filing taxes as a freelancer. So first and foremost, right, these are some of the questions that we categorized based off general freelancer best practices, deductions and credits, and then miscellaneous situations overall. We don't have every question in here that everybody had, but we tried bucketing them in a way that may be helpful overall. So the first one, how to file as a freelancer and maximize your refund. So this may be more for people who are new to this overall. So Generally speaking, right, this is a sole proprietor. This is could be a single member LLC that files as a sole proprietor. You will file on your personal tax return, which is the 1040 tax return. So for people who were W-2 employees, right, you go through, you enter your W-2, and it kicks out a refund overall. The next step as a freelancer is you file what's called a Schedule C. So a Schedule C is kind of like a mini tax return that relates to your business overall, that talks about, hey, here's the income I received, here's the expenses and deductions for the business that I ultimately had, and it kicks out this profit, right, calculation overall. And then you have to, based off your profit, the joys of being a freelancer is that you have to pay your full Social Security, Medicare tax, or FICA wage overall. So while you still file the personal return and you have like your investment income or the stocks that you sell, interest that you earn from a bank, all that still goes on your personal return. As a sole proprietor or as a single member LLC, you file this Schedule C, which then does this profit loss calculation, which also goes on your business, on your personal return. So the main thing is everything is all encompassed into one tax return filing in that scenario. 1099K forms and other forms freelancers should be aware of, right? 1099K forms, I'm not saying they're new this year, but the rules changed around them. And then the rules technically changed back. So let me pause there for a second and say the 1099K rules, you were supposed to get a 1099K if your income was $20,000 or above and you had over 200 transactions for the sales of your goods and services overall. They changed that as part of the American Rescue Plan Act to say if you have sale of goods or services that's just $600 and above, you're going to get a 1099K. And then in late December this last year, they changed the rules back because they thought there would be confusion. Well, guess what? Yeah, that's nice. That's good. But I think there's still confusion out there because 1099K forms are still being filed because it was just real late in the year. So if you do get a 1099K form, the one thing I want to point out is, well, we should be filing it, right? Whether if it's income that you earned as a freelancer, if it's income you earn for personal property, whatever it may be, this income should be filed on your return. If you do get a form, you should file it. Now, whether how much of it is taxable or not is another story. That ultimately needs to be determined based off the type of income that it is. If you are getting the 1099K, that's for both business and personal reasons, right? We got to split that out. But at the end of the day, we'll have to report it. And typically, in most situations, as a freelancer, if it relates to your freelance work, it's going to go on your Schedule C, similar to maybe what a 1099 NEC form has done in the past or will do in the future. Outside of that, those would be the main like new forms. Like, hey, these are the new things that I could be getting in the mail as a freelancer this year. If you're new to freelancing, well, you'll get real familiar with seeing these 1099 NEC or 1099K forms as we move forward in future tax years. Newly created LLCs, what should I know or what you should know overall? Well, congrats. That was a lot of paperwork that you just went through to ultimately get set up, right? That's the one con of kind of setting those LLCs up, is that you just have to do a lot of paperwork each and every year. You at least got potentially your EIN. You got set up as maybe a single member LLC overall. But once you're set up, and there may be a little bit of paperwork you do each year, but at least the hard part's over with. But then now that you're filing a tax return each year, right, you have what I call that wall, right? Here's my personal stuff over here. Here's my business stuff over here. If something happens on the business side, it's not going to impact my personal side. That's the great thing about the LLC. When you go to file, again, typically you will file the same way as I mentioned earlier when you file a Schedule C as a single member LLC overall. So the same information, the income, the deductions or expenses go on the Schedule C, and that transfers ultimately to your 1040, where you report your profit and pay the taxes on that profit, as well as your FICA taxes on it as well. Accounting for owner's draw overall here. So the one thing I would say to that ultimately is that I think I went ahead slide. Apologies there. When you think about taking a draw as a sole proprietor or even as a single member LLC, each and every year when you earn that income, you're paying taxes on it immediately. Okay. So there is nothing where if I earn $50,000, but I keep $30,000 in the business overall, I only have to pay taxes on $20,000 of that. That's not true, right? The IRS is going to tax you on the full $50,000 in the year that you earn that income. So what I'm trying to say there is if you want to take it what may be deemed an owner's draw from the business checking account or the savings account, you can just go ahead and do that. That's more of an accounting records, note, right? It's the checkbook, it's balancing the checkbook overall that you did this. But from a tax purposes, if you take that owner's draw, maybe you refer to it as a distribution, as a single member LLC or as a sole proprietor, in the freelancer situation, there is nothing you need to do to pay taxes on that. That's just a draw you can take tax-free because you've already paid taxes on it. And then really just the last one is about quarterly estimated tax payments for those that don't know, right? You're earning income throughout the year. It could be that you earn a lot of income in Q4, like meaning October through December, could earn a lot of income early in the year. It's going to depend on what each person does, how often they're doing their freelancer work in general. But generally speaking, when paying your quarterly taxes, the easiest way I look at doing this in order to avoid an underpayment penalty is make sure that whatever your tax bill was in the prior year, you want to make sure that your withholdings cover 100% of that prior year tax liability. That's a surefire way to ultimately avoid having to worry about an underpayment penalty in general. Now, that's not a surefire way of stopping of owing more money in taxes, right? You could find yourself with a balance due of $1,000 or $2,000 or whatever it may be. You're just avoiding an underpayment penalty. So in order to avoid the $1,000 or $2,000, you really got to plan through what you think your income is going to look like for a full year. You got to think about if you have other side jobs where maybe you're an employer somewhere and get a W-2, if you have withholdings that help cover that new income. And then if you don't, right, now you got to make quarterly estimated tax payments to help cover what you think your tax liability is going to be due for that next year overall. So again, your goal may be try to get to zero. Your goal may be, well, I still want a refund, so I'm going to pay in extra for the year. Or your goal is, well, I just want to avoid an underpayment penalty, but I'm okay owing the IRS at the end of the year. So it's whatever goal you have in mind. If you don't have withholdings that can cover it through other things like a W-2, where you're doing the freelancer work on the side, for instance, then you'll want to make quarterly estimated tax payments with the IRS to help cover that bill. All right, let's jump to deductions and credits. So the first one on this list, difference between a tax deduction and a write-off. Quite honestly, there is no difference. There really is no difference overall, right? A tax deduction and a write-off is really an expense or a deduction that ultimately goes against your income. So if I earned $50,000 during the year and I paid, make something up, $10,000 in advertising expenses, it can be called a tax deduction. It can be called a write-off. It doesn't really matter. That goes against my $50,000 of income. So now I only have $40,000 of income to report, right? The difference there may be what people think of as a tax credit. A tax credit ultimately goes against your tax calculated amount, right? You have taxable income and then you figure out what tax bracket you're in and that kicks out a tax amount. So tax credits offset the tax calculation. Tax deductions or write-offs offset income. I think we must have got some questions on vehicle write-offs. So vehicle write-offs can vary. Typically, you can depreciate your vehicle or you can use the standard mileage rate. The standard mileage rate, and within the standard mileage rate, like that one's fairly simple. You just keep track of your mileage throughout the year. The IRS comes out with a standard mileage rate amount. I can't remember what it is for this year, but typically it's somewhere in the 50-cent range per mile driven. That's business mile related. But that's a quick way without having to keep track of receipts and things of that nature. You can just keep track of your mileage overall. And then within that, you could also, instead of doing the standard mileage rate, you can actually use your actual expenses. So if you keep track of your gas purchases, you keep track of your tires being rotated or new tires being added or whatever, oil changes, whatever it may be, you can do it that way as well. But that's a little more paperwork as it relates to it. And sometimes just doing the standard mileage rate is a little easier to do that. And then just from a depreciation standpoint, you might buy a new vehicle or you put your vehicle in service and then you can write off up to 5 years, an equal amount typically in depreciation over those 5 years. There are special rules around bonus depreciation and things of that nature where you can write it off faster. when used for business purposes. But again, typically you can deduct a vehicle over 5 years. So categories for business expenses, examples, meals when hosting someone. Yeah, I mean, if you're taking a client or someone out for dinner, you're traveling somewhere for work, you have advertising expenses, supplies, paper clips. I'm just coming off with some random ones here. Pretty much anything, guys, that is ordinary and necessary for you to run your business can be deducted as a business expense. The one thing I'll throw out there is just as an example, and I've used it in the past, is I got a haircut recently. Hopefully it doesn't look too bad, but I got a haircut recently. But I can't write off my haircut because there's nothing ordinary and necessary about my role, assuming I was a freelancer, about my role that requires me to have this haircut. Now, if I'm a freelancer who's always doing, is on camera all the time and the appearance matters more than maybe it does with this, you could argue that the haircut or the professional haircut that you get is ordinary and necessary for the freelance work that you do. So you'll always hear me say and others say, is it ordinary and is it necessary for the business that you do? That's the two things you should really focus on when determining whether something is deductible. Okay, business expenses for fees through PayPal and Stripe. Yeah, the main thing I'll say here, yes, yeah, definitely, right? We want to write those things off overall. The main thing here is it can be done in multiple ways on how you report this on your Schedule C. Sometimes people put it in like the cost of goods sold section. Sometimes people just add a line item on the Schedule C that says PayPal/Stripe expenses. The main thing the IRS wants you to do overall is just be consistent. So year over year, don't make big changes about where you report things one year and then you switch it to another line item the next year. It's not going to be perfect. I don't think the IRS expects anything to be perfect overall. They just want it to be consistent year over year as it relates to how you report it. And then how to calculate/claim a home office. So the simplest way, you heard me say earlier on vehicle expenses, is use the standard mileage rate. It's simple. It's easy to keep track of. There's also a standard home rate as it relates to using a home office as well. So it allows up to 300 square feet of your home to use this standard deduction, and it provides $5 a square foot. So each year, if you have 300 square feet, it's $1,500 write-off on your taxes overall. So that is a quick way to do it. If we want to go higher and kind of keep track of things more, right? You got to measure it, get the tape measure out, or look at your floor plans of your house that might provide a little bit of information. But then figure out that square footage percentage for that area you're using for business. The one thing I want to stress here, no matter what's done, it's got to be for business, right? Please, please, please make sure you don't have a bunch of personal items sitting in that business space, because if the IRS does decide that they want to come find out more as it relates to your business as a freelancer, and they want to look at this space, they don't want to see a bunch of personal stuff in there. They want to see it really dedicated to business use overall. So that's just one little tip to make sure you look out for as you take that deduction on your taxes. And you should if you're using your home as a business. All right, miscellaneous situations. So what's the best way to file when juggling freelancing with a day job? Same way as kind of what I mentioned earlier. You're still going to do the 1040 tax return, and you're still going to file that Schedule C overall. So it's the balance. You have the day job, you're going to get a W-2 for it. That's great. Highly recommend, if you don't want to do an extra step about those quarterly estimated tax payments, is that you increase your withholdings through that W-4 with your employer to help cover the income that you earn in your freelance work overall. It's just a quick way to do it to make sure you're covering that extra income overall. But you will still file that 1040. You'll file a Schedule C. Right? Make sure that you're documenting all of your expenses in some Excel sheet or however you best balance the books overall. But at the end of the day, you want to make sure you're organized and have all that information, because it'll make it easier come tax time. All right. How to handle taxes you paid in states you don't live. Yeah, that's can be a little tricky. There's no doubt. So you have to figure out first and foremost what your state of residency is. Some states that you live in or that you work in have what's called as a reciprocal agreement. So sometimes you don't have to file a tax return in the state that you work overall. If that's true, that's awesome. That makes things simpler, but not all states have a reciprocal agreement. So if they don't, what you actually have to do is you have to file that non-resident return first. And then when you go through it, you allocate your income that is only to that state that you're a non-resident of. So let's just say I live in Iowa and I work in Illinois, just as an example here. I have a W-2 job that I make some money off of, and then I have freelancer work. So let's just say I make $20,000 working in Iowa for an employer in Iowa, and I make $10,000 for freelance work. On my Iowa return as a full year resident, all $30,000 of that is taxable, right? If you're a full year resident of a state, they want their money, right? That's just pure and simple. They all income earned anywhere is taxable as a full year resident in the state that you're in. Now for Illinois, you actually have to file that tax return first. You go through and you file this return, only including the $10,000 of income that you earn for that freelancer work in Illinois, right? That comes up with a tax rate. You pay some tax to Illinois for doing that. We'll just say it's $100. Now, when you go to file your Iowa return as a full year resident, what they allow you to do is claim what's called a credit for taxes paid to another state. So that $100 that I just paid by filing that Illinois return to Illinois, I'll get $100 off my tax bill for Iowa because I paid Illinois, right? We don't want that double taxation to happen, and we want to avoid that. So there's a little bit of this, hey, we got to file those non-resident returns first, figure out what you pay in tax there, and then you can file for a credit for taxes paid on your full year resident state. All right, what to do if you owe back taxes? I think it's just going to be one of those things ultimately that we just have to understand what we owe in back taxes, and then we have to talk to the IRS or the state agency overall. There are some things you can do, right? You can set up an installment agreement request with them that they ultimately can approve, where they can pay out those payments to them over time at a pretty reasonable interest rate overall. That's one option. There's a little bit of paperwork to go through to get that set up. Obviously some not so great options would be like, well, you can put it on your credit card, but we know credit card interest rates can be pretty high. You can borrow from family or friends, but sometimes that can be a difficult conversation to have. Or you can just, hey, I can pay it off. Well, let's just go ahead and pay it off now. But typically the best plan in that situation, if you need time to pay it off over time, would be to sign up for an installment agreement with the IRS. And there is, like I said, there's paperwork to go through. There are some qualifications you need to meet. But at the end of the day, that one is helpful to help people through that scenario. All right, what's the best way to catch up on taxes if you're behind a few years? Really, the best thing you can do is just get everything organized and really just get started, right? You have to be able to start, whether it's a 2019 return, a 2020 return, 2021 return. You just got to get the software going. If you're doing it yourself, you got to talk to a tax preparer if you don't want to do it yourself. Have everything organized for each and every year, where at the end of the day, we can just plug in this information. You could find out you have a refund. Maybe you don't. Maybe you have a balance due. But the best thing is really just get started. That's the hardest part, right? It's always the procrastination sometimes. It's the just getting started. And then once you get started, you find things roll a little bit faster, which reminds me, I need to get started on my taxes for this year as well. And then how to claim taxes on income from a different country. So this one's going to depend. Again, there's a little bit of different rules as it relates to what you can do in this scenario. But there's a couple different options, maybe 3 different options of ways to do this. So one is a foreign earned income exclusion. Again, there's rules about whether you're a U.S. citizen and you live in that country for a majority of the year. I think it's like over 330 days or something like that. And if you meet those requirements, you can exclude your income from that other country on your U.S. return. So guys, remember me saying this earlier about the states and they always want their money as a full year resident. The same holds true for the United States government, right? Just because if you're a U.S. citizen and you're earning income somewhere else, the United States still wants their money overall. So the foreign earned income exclusion is an option. Another one is called a foreign tax credit. So if you pay taxes in another country, the amount of tax that you paid on that income could be claimed as a foreign tax credit on your U.S. tax return on the 1040. Sounds very similar to that credit for taxes paid to another state, right? In theory, it really is very similar, just the process of filling out the forms a little bit different. And then the last way is really claiming it as an itemized deduction, where you can exclude that income as an itemized deduction on your return. That one's less preferable because not everybody itemizes, right? In the standard deduction is so much higher nowadays, from 2018 during the tax reform period, where it makes it a lot harder for individuals to itemize their deductions. So the best thing you can do is to really claim the foreign earned income exclusion or the foreign tax credit. All right, just to talk about a few more helpful resources overall. So again, we talked a little bit about some content that's out there for you all. So there's a couple articles out here that will be in this deck, will be out on the Tax Resource Center as well. That just provides some more information about some of the categories of questions that we talked about, right? 7 commonly asked small business tax questions, and really what's new about the home office deduction in 2022. So if that's something of interest for you all, please go check it out, read through it. It's going to be helpful when you file your taxes this year. One more plug for TaxAct, right? Just to share, hey, this is a good business, right? I know everybody knows some of the other companies out there, but TaxAct's been around for quite a while too. So just to share one of the testimonials from Denise, 1977, from Greenville, North Carolina, saying, "I have been doing my taxes for many years. I also do taxes for my family members and friends. I've tried out several online software programs for taxes, but TaxAct is by far the best. It's very easy to use and thorough." We appreciate those kind words and would love to have those kind words from you all as well. All right, so Jalen, I think we now have time for questions. And you might be on mute. Oh, back on mute again.
There we go.
There we go.
Third time's a charm. But yeah, we got a lot of great questions in the chat throughout. I'm going to try and group them kind of on topic. So the first one in regards to TaxAct. How well does TaxAct integrate with previous year filings with TurboTax Home and Business as well as QuickBooks? I would like to use an alternative than TurboTax.
Yeah, so as it relates to prior year taxes with TurboTax and H&R Block and others, right? We do offer a prior year comparison report. Prior year comparison. I say in comparison. A prior year PDF import. I don't know why I can't say the word PDF. A prior year PDF import that when you come in and you have a prior year copy of your return overall, pretty much in the early stages of your filing with TaxAct, you should get an option to basically say, hey, how did you file last year? If you filed with someone else, do you have a copy of your PDF? You can upload a copy of that PDF and we'll import as much of that data as we can to start the process a little bit earlier. As it relates to the kind of the business side, the QuickBooks side, there's less of an integration there. We have an integration if you're filing what's like an LLC, like a multi-member LLC or a corp or an S corp return. But as it relates to like a sole proprietor or single member LLC, there's not really an option to pull in that information. A lot of that will just have to be manually pulled from QuickBooks and TaxAct.
Got it. Cool. And the next question, still regarding with TaxAct, I had a 1099K income, but did not get a 1099K from PayPal. I've started filing with TaxAct. Where do I input that income? Do I still enter it as a 1099K? Where do I also input royalties? Thank you so much.
Yeah. So if you didn't get a 1099K from PayPal this year, which again is perfectly normal, can be the case, I wouldn't enter it as royalties unless for some reason it was royalties. Right? Royalties could be like timber and oil and things of that nature, but I'm guessing that probably wasn't the case. There should be a spot that just talks about like other income in the Schedule C section when you go through the income flow. So you can just put it in a spot for other since you didn't have a 1099K.
Awesome. All right, so the next question, next few ones are going to be about quarterly payments. What if I haven't made any quarterly payments for 2020? Are there any penalties? I think it's a percentage, or I don't remember if it's a percentage or a flat fee, but I know there is penalties.
Yeah, well, it's going to depend, right? It's not a problem necessarily, excuse me, if you haven't made quarterly payments overall. It just depends what the rest of your tax scenario looks like. So I talked a little bit earlier, like, hey, you could have a job as an employee where you have withholdings taken out of your paycheck. Excuse me. And those withholdings may be covering your freelance work. Like that's all great and good. Now, sorry, as I'm battling a cough here. Now, if all you earned was freelancer income and you earned a good amount of money and you didn't have any withholdings taken out or any estimated tax payments, that will be a problem. Yeah. So I'm going to take a drink real quick.
Go ahead. I've been kind of doing that throughout because I know talking a lot, you tend to forget that you need a drink.
So at that point, it's kind of late. You'll probably have to pay a penalty in that scenario. But if you paid in 100% of your prior year tax in this year with withholdings, you'll be okay from that standpoint. But if not, there will be some sort of penalty on your return.
Got it. Cool. And the next question with quarterly payments, do you recommend paying the same amount for each quarterly estimate or just paying based on what you earned in that specific quarter?
Yeah, I typically say in this scenario to pay equal. There is a way for you. It's called the annualized installment method, where you can break apart. Where let's just say I earned $20,000 in Q1, but I only earned like $1,000 in Q2 and $3,000 in Q3 and $50,000 in Q4. There is a way to handle that, right? If you want to hold on to your money longer, it's an extra form to file overall. But if you're looking to just kind of minimize your paperwork overall, the simplest thing to do is to make equal payments. But again, at the same point, if you want to kind of limit how much you pay in quarterly, hold on to that money, maybe invest it for another quarter, you can do that and make unequal payments.
Awesome. You briefly touched on this in the presentation, being a mixed incomer, whether you work, you have a job, but also work as a freelancer. So Sarah asked, what if I get a W-2 and a 1099 miscellaneous from the same employer? How do I file a 1099 miscellaneous? I want to say for the first half, that sounds like it could be a slight misclassification, which is a whole other issue, but I will let you touch on that.
Yeah. I mean, it's a tough one. It's going to depend on each situation. Maybe you started as an employee and then you moved to a freelancer work with the company, just maybe based off the job role change or something along those lines, or vice versa. Maybe you started as a freelancer and then they wanted you to join as a full-time employee. Like that could be a scenario. Again, the 1099 MISC will be similar. If the work is for that company, right? You are a freelancer. You should be filing a Schedule C for that income overall. And then you'll file and enter the W-2 like you normally would as an employee of the company. So all of that will be consolidated on one return, but the W-2 will go onto your 1040. You'll file a Schedule C for that 1099 MISC. I apologize, guys. I don't know what's going on with me here. You'll file a Schedule C for the 1099 MISC, and then you just want to make sure that your W-2 and your 1099 MISC don't include the same income, right? You don't want your income reported twice on two different documents. So it should be for different income amounts. And then to your point, Jalen, hopefully it's a situation that's legal in terms of you're going from a freelancer to a employer or employee to freelancer. But assuming that is the case, then that's what you would do.
Awesome. All right, let me see some other questions. So just a quick question from Heidi, who asked, will the recording be available emailed out after the webinar is over? Yes, it will also exist here on our YouTube page. It will be available to you whenever, wherever. So you can go back, check out the links as well, check out the Tax Center resources. But yeah, we will essentially have unlimited access. It's an important thing that we think that you should have access to for taxes, especially this time of year. So yeah. So the next question I have is, if I have multiple clients and I do not always get a 1099, is that okay? And where do I put that income? I usually get paid by checks by my clients. I know the short answer is, even if your client doesn't give you a 1099, you still have to report it. That doesn't mean you're exempt from reporting it. Just always factor that into your filing.
That's right. It'll be the same as that earlier conversation about I didn't get a 1099K, but where do I put it? That other income section. There'll be another income line on your Schedule C. So even if you didn't get a 1099, you'll want to put it as other income.
Awesome. Next question is, as designers, we serve different industries. Can we write off different products, services from those industries other than our clients? Example, if I'm branding a skincare company, can I write off my products? You can write off the supplies to make those products if that's something like costs to produce those goods. You can, I mean, it really depends. Any costs that you may have with like printing for those branding things, any subscriptions for like software like Photoshop to create the content, all these things you can write off. Anything else that I'm missing?
Yeah, I mean, if it's for your own product, so it sounds like there's some signage and stuff like that for another company, but then you have your own products for this overall. It might be filed as two different businesses or two different Schedule Cs. But yeah, I mean, it's if you're selling a product overall and you sell, usually it's an inventory or cost of goods sold type of thing. But you'd be able to write off the inventory kind of going down each year as it relates to your products as well. But it sounds like in that situation, it could be almost two different businesses based off helping another company and then selling your own products for maybe a similar line, maybe not. That one's a little gray area.
Gotcha. All right, let me see. All right, we're going to go a little bit more about deductions. So Tanya asks, can you talk about taking out deductions as an employee and as an employer?
Yeah, so as an employee, right, you file a W-4 form with your employer. And that helps understand like how much of your federal and state withholdings to remove from your paychecks, whether it's weekly or biweekly or whatever it may be. As the freelancer, you don't really do that. Like the employer will pay quarterly payment or pay payments for you. They're going to capture all your withholdings as an employee, and then they'll file it with the IRS and with the state agencies, usually quarterly, on those taxes overall, and that's how you get credit with the IRS for it. But as a freelancer, you have to do that quarterly estimated tax payment, which is the Form 1040 ES that we talked about earlier. In that situation, you could just go out to the IRS website, make those payments. When you file your tax return, you have an option to make those quarterly and have them directly debited from your bank account on a quarterly basis as well. So that will only cover your tax, like your tax bill as it relates to what I call income taxes overall. Remember, as a freelancer, you have to pay your own portion of FICA taxes. So remember, as an employee, you have that Social Security tax that comes out, the Medicare tax that comes out, and everybody's kind of like, especially new people, teenagers, right? Like, what is this? Who's this FICA person taking money out of my taxes? Well, they're only taking out the 7.65%. As a freelancer, you got to pay the full 15.3%. That also does go on your return and is usually calculated on a Schedule SE.
Yeah, and I know from on our ends for either past workshops we've had or other experts, we're always given the advice to save 20 to 25% just in case.
Yeah.
Just as a buffer, just so you have a little bit extra. Just you never know.
Yeah, it's the old adage, right, of, well, everybody's different. Do I want to get a refund at the end of the year? Do I want to be right at zero? Or do I want to pay into the IRS but while avoiding an underpayment penalty? So it's each your own. But I agree with that. 20 to 25% typically will cover your needs for a year.
Awesome. All right, next question we have is, when working from home and cooking all our meals, can we write off our grocery bill?
Unfortunately, no, that will not be the case. I wish that was the case. The IRS lumps that into the standard deduction. So you guys know you get a standard deduction each year as an individual filer. So all that typically lumps into that in terms of that calculation. But no, that wouldn't be allowable unless for some reason you have a client that comes over and you're trying to entertain a client as part of your business or as part of your freelance work overall. But generally speaking, no, that wouldn't be deductible.
But you can write off meals if you're traveling, correct? For business?
For business, yeah. If you're traveling for business,
not for leisure.
Yeah, that can happen. That's right.
Cool. All right, let me just double check. All right, we're going to be jumping around a little bit. I work in video production and had a 1099 job for which I had to spend 10 hours training with equipment and manuals I was not familiar with. Can I deduct reasonable amounts as an educational expense? I'm pretty sure you can.
Yes. Yeah. If you weren't paid for it and you were working with that 1099 job, absolutely. And I'll give an example. So my wife's a physical therapist and she does freelance work for part of the school district here in Iowa where I live and for a few other companies. So she goes through she has her licenses. She goes through training classes in order to stay up on her education. And that's needed for her business. So because it's ordinary and necessary for her business, she's able to write that off. And I say I write it off on our taxes as part of her freelance work overall.
Gotcha.
Same situation, I guess, is what I'm saying here. Yeah, just as another example, you definitely could, especially if you weren't paid back for it. It came out of pocket.
Yeah, and also if you attend any classes that you may pay for or any sort of business development type things, you can write those off as well.
Mm-hmm.
All right, let me see. Next question. If my clients all pay me through PayPal, am I coding this as PayPal or a miscellaneous income?
Yeah, if PayPal's not giving you anything either, like a 1099K, which in future years they definitely will, barring changes to the tax code and things like that. Yeah, you'll just put it as other. Same as we mentioned earlier for that 1099 MISC or K. You'll just put it as other on the Schedule C.
Cool. All right, next question is, if you did some gig work with multiple companies, for example, Uber, DoorDash, maybe other delivery apps, are they filed on a tax return under multiple Schedule Cs?
If it's similar business, if it's similar work, I would just pull it all together under one Schedule C, right? So Uber, Lyft, like that's similar work. You're providing kind of shuttle services for individuals, around town or whatever it may be. That's a similar business. The only time you want to file a separate Schedule C is if, okay, I was doing work for Uber, but then I was an independent or I was a freelancer cutting people's hair, right? That's just two different businesses that you really can't combine overall. But if it really is the same business, kind of doing the same type of work overall, that's the situation you want to do one Schedule C.
Gotcha. Cool. Next one, kind of going back, I guess it sparked conversation about travel. How much can I deduct for travel to a conference and then personal travel afterwards? For example, if I go to 2 conferences a month apart with a personal trip in between.
Yeah, so that's going to be a little bit of a gray area, right? Typically, you're allowed to do your expenses for the needs of the trip overall. So let's just say the conference was 2 or 3 days, right? You could argue coming in the night before or staying the night after the conference ends will count towards like your hotel stays and things like that for business purposes. But if you extend out this trip for like another 5 days, even though the conference ended 5 days earlier, that will likely be personal. Now, getting to and from, it doesn't matter, right? Whether you go up a day early or leave 5 days later, that will be deductible as part of your business expenses overall. But if you stay 5 more nights for a conference, let's just say you stay 8 nights for a conference that was only 3 nights, there may be some questions that come up if you have to justify that with the IRS.
Got it. Cool. All right, next question. In regards to having credit card or credit card fees, are those tax deductible, like having an Amex Platinum, which is almost $700 a year? I'm pretty sure if it's a business, yes. If it's a business card, yes. If it's just a general credit card, I don't believe so.
Yeah, ideally, you're separating your business. This is one of the reasons you do that. You can have a business, right, account, like checking account, personal account, business credit card, personal card. So if it's a business card, right, you can deduct that $695 fee overall.
Awesome. All right, next question. We did touch briefly on this, or what about fees for doing work through freelance website? They take a 10% fee. Yes, you can write that off as a service charge for using that platform. Anything as well in that regards. You can even write off shipping if you ship goods like that you actually sell to people. You can write off the shipping expenses. any like supply costs for shipping as well. All these small things. If it helps you run your business to whatever extent, then you can generally write it off.
That's right. Just be consistent year over
Yes.
year. How you report it and where you report it on the Schedule C, just be consistent. But yes, you're absolutely right, Jalen.
Let me see a couple. There's a lot of things coming in right now. Touched on that. All right, we're going to be jumping around a little bit. I see some questions about LLCs. Where question go? I registered my single member LLC in 2021, but I didn't really have activity until 2022. Are there specific first year deductions to be aware of, and if so I don't miss out on them?
Yeah, I mean, when you went and registered your LLC and did all the paperwork, sometimes there's fees associated with doing that, right? You don't want to forget about doing that overall. Sometimes you buy insurance, right? Sometimes you get insurance for your business or for your freelance work overall. I'm not saying everybody has that. Again, my wife, physical therapist, right? Anything with healthcare, usually you find insurance involved with it at some point. But things like insurance is
important. Sorry, Mark, you got cut off. When you started talking about insurance, you got cut off. So
okay.
If you could,
am I here now?
Repeat that. Yeah, you're fine now.
Yeah, sounds good. Yeah, it's just about ultimately at the end of the day, yeah, you don't want to forget about the starting up, the fees to actually register your LLC, and you probably have to pay a fee each year to do that. And then just insurance in general is just another one I can think of, right? You might sign up for insurance right away. And that might be something you want to claim early on in the process as well. Usually that's a yearly expense, but it could be set up differently.
And I guess it's not a comment in the chat, but just one that's coming to my head that I've also seen before in the past that people have asked, like if they have signed up either as an LLC or register as an LLC or S Corp, and either they don't profit or they're actually in the hole, what do you do?
Hey, you have a net loss, right? So as a single member LLC, if your income is $20,000, but you have $25,000 in expenses, that means you have a loss of $5,000. That goes to offset your other income from like W-2s and things of that nature. So there could be benefits from a tax credit standpoint that'd be helpful with, but that's okay, right? The goal is, hey, it's early, your business, you probably just have a bunch of write-offs for 1 year. I've seen really profitable companies have a loss because they have a whole bunch of expenses for 1 year that they're writing off. So there's no stigma to that. There's nothing bad about it overall. But you would have in that example I provided, you'd have a $5,000 loss for the year.
Got it. Cool. The next question. It's my first year filing as a freelancer with an LLC, but I have about $6,000 in expenses from 2021 that I did not report last year. Can I write those expenses off this year? Yeah,
the answer, unfortunately, to that will be no. You can always do anything, right? But from the fine line of the IRS, when you incur those expenses, when you incur that income, it should be reported on that specific tax year.
Got it. Cool. All right, let me see. I think there's a few more questions that we haven't addressed. Can you discuss the pros and cons of taking the standard deduction versus itemizing and claiming business expenses? I'm not a structured business and would be filing as an individual.
Yeah, so if what am I understanding, not a structured business, meaning you're not quite a freelancer. Yeah, you're not quite a freelancer yet, sole proprietor, but you're still an employee. In 2018, the business expenses went away, right? That was part of the Tax Reform Act, the raising the standard deduction amount, and they got rid of and capped some itemized deductions. So you might hear this term called the SALT limitation, state and local income tax limitation. That lowered the threshold of like property taxes, real estate taxes, that type of thing to be lowered to $10,000 or less. And then the same holds true for employee business-related expenses. They're gone. Unfortunately, there's nothing you can do. We entered COVID when people started working from home and probably had some of those expenses. But at the end of the day, they're not allowed as an itemized deduction anymore. So the value of itemizing, while you still can, there's opportunities to do so based off mortgage interest and other things. The standard deduction really applies for like 94% of all filers out there nowadays.
Got it. That makes sense. Next question that I think, this was from earlier that I forgot. I think my severance package from losing a job was overtaxed at the time. How do I know if it was or not?
So they may over withhold. So with severance payments, what they do, it's just like a bonus. They don't know what tax bracket you're going to end at the end of the year, because when you have your job as like a W-2 employee, when you get paid biweekly, your company has a great idea as to like how much from a W-4 perspective that you should have withheld from your paycheck, kind of in order to meet your tax obligations for each and every year. But when they pay out a lump sum, like a bonus or like a severance payment overall, where they're not issuing it in biweekly payments, they're issuing it all at once, which typically happens with a severance payment. They over withhold, or over, if you want to call it tax, they over index on how much money they take out of that severance payment check right away to ensure that you have enough withholdings when you go to file your tax return for it for that year. So what should happen in theory then is when you go to file your taxes, you'll see a bigger bump, more withholdings on your W-2, for instance, overall. And you should, in theory, if all holds equal in your tax life and your tax scenario, you should see a bigger refund or less of a balance due this year.
Got it. Cool. Next question that I have is, when do we have to file our taxes for an LLC versus personal?
Yeah, so as a single member LLC or just filing your personal return, since they're filed on the same return, it's due April 18th. If you're filing like a multi-member LLC, which requires a 1065, that's due on March 15th. But generally speaking here, I think we've been referring to single member LLCs, sole proprietors, which they're combined. It's on the same form, the Form 1040, and then that'll be April 18th.
Awesome. And just to clarify for Jamie, if we take the standard deduction, do we still have to file a Schedule C?
Yeah, so the standard deduction is really for things outside of the business or outside of the freelancer work. So you still have to file a Schedule C showing all your income and your expenses for that business. The standard deduction is going to be more about just personal things, like somebody talked about grocery bills and things of that nature. That standard deduction is just for personal related items overall as it relates to your personal life versus your business life.
And also just to, I guess, second clarify, if you're over that threshold for the standard deduction, is that when you should do itemized or?
Yeah, you don't have to, but if your itemized deductions are larger than your standard deduction, if you didn't itemize, you'd be paying more in taxes, generally speaking. So it would be beneficial to do it. But again, that's each individual's choice.
Got it. Cool. I don't think there's anything left. I'm just double checking everything. In the meantime, I will ask, is there any common mistakes that you guys see all the time that people make that's just kind of like maybe an overthought, or it's just like, oh, why didn't I think of that?
Yeah, I think one is the organization. I think people will scramble around April 18th to try to get this all done. And they're like looking for all their documents and all their expenses everywhere. So I would say, hey, it's important just to get organized with all your expenditures for your freelancer work overall. And then the other one is just ordinary necessary, right? Don't be afraid. Don't be afraid to take these expenses, to take these deductions. I think we know historically that people will err on the side of caution and not claim something, even though they're 100% entitled to claim it. So I know, Jalen, you threw out some good ones earlier, like, hey, if it's important for the business, if it's needed for the business, do it. That would be my theme for you all. If it's really needed for your business to really operate, even though it may seem like, wait, on education costs. Well, yeah, it's education costs for me as the business owner, as the freelancer, to do this work. So it should be something that is written off for you. So don't be afraid, right? There's a line, ordinary and necessary. But I would err on the side of like, hey, let's really think through each one of your expenses for the year and think through whether it's ordinary, necessary, and be able to claim it on your return.
Got it. Cool. I think that's great advice. And while we were talking about that, several more questions popped in, and these are pretty good questions. So next one is, Medicare imposed a retroactive IRMA fee in December 22 for 21 tax returns. Started paying down this fee in 2023. Do I deduct the medical premium from 2023 when paid, or 2021 assessment on a 2021 return? That might be a little bit too technical, but maybe.
Yeah, that one's pretty deep. But generally speaking, I can't say this with 100% accuracy, but the way the tax system works is it's always when it's paid. So if you paid something in 2023, it's going to be on your 2023 taxes. If you paid something in 2022, it's going to be on your 22 taxes, etc. So even if something incurs in a prior year, if you pay it within that certain year, whether it's 2022 or 2023, it's going to be involved with your 2022 taxes or 2023 taxes.
Awesome. Cool. So the next question that we have, this is so clarification from before about hiring, I guess, the beauty products and helping market for a beauty company. If I'm hired to brand a client's company and then purchase competitor products, can I deduct those as research? Yes.
Yep.
Yeah. Yes, you can.
Hey, I like to go. I'm a fisherman, folks. I don't know if people know that about me. I don't know why you would. But I have a friend who owns an ice fishing business. Ice fishing, I know. I'm in Iowa, guys. Sorry. But he has lures that he sells, and he goes on trips to test his lures. Those trips that he does, even though it may sound like, man, he's just fishing. Well, yeah, he's fishing, but that's his business, right? He's trying it out. He's using it, making sure that it's actually catching fish. So all that he's doing there is able to deduct as expenses on his return. So yes, 100%. If you're buying competitor products or whatever it may be to do research on your own, absolutely, you should be able to deduct that.
Business events count too. I'll talk for my anecdotal experience. So part of what I do freelancing is make a lot of custom toys for adult collectors. And I will go to comic conventions, not even as a vendor, just as a guest. Sometimes I will network, talk to other people, talk to either celebrities, TV stars, present them with things. They help market me, things like that. And I write off my ticket as an expense because I'm there for work. I'm not really there. I mean, I'm a little bit there as a fan, but I'm generally there for work. So you have to think out of the box in that sense too. So if you're a hairstylist going to a convention for hair and beauty products, you can write that off. You can just have to think about it. Let me see the next question. This one might be a little bit technical, but I will have you make the call. What considerations should I think about in terms of classifying Airbnb income as Schedule E, rental income, versus Schedule C, a vacation rental business?
Yeah, I don't know if I have any considerations. I can just tell you what I've seen historically from individuals who have been in this bucket. Typically, they've reported this as a Schedule E with rental property because it's dealing with their home or their vacation home or whatever it may be. It's property that they have that they're renting out. Historically, I'm not saying I haven't seen Schedule C because I have, but generally speaking, I see people report it on a Schedule E overall. Yeah.
Got it. Cool. All right, I think this is a two-parter. 1 second. All right, this is a little bit of a two-parter, so I'll do the first half first. If I do a grad program in another country that's related to my business, are all my living expenses during the program deductible business expenses?
Yeah, I don't think that's what they're going to allow to have happen in that scenario. I think they just look at it as you have to change your residence for a while for purposes of it. But that's a fine line, right? And then, like I said, we have CPAs and EAs who do this like every day, every single hour for a living. That may be worth having a conversation to fully confirm with them. But that one may be a little out of my scope to fully answer.
Yeah, I also feel like depending on the country, you'll just be under whatever local taxes for that country will be. Like I know for the UK, they don't really do income tax, but they have council tax, which is essentially like property tax and everything like that. And that's pretty much for everybody. I think the only exemptions are students and like underage minors. So you might, like in that case, you would have to pay city council tax for that. You just have to kind of do the research of that specific country, to be honest. And then the second part was, I work in language services. Is traveling in a country where my language is spoken automatically considered continuing professional development?
Again, that one may be a fine line. My initial smile or reaction is no, it's not. But it's a fine line, right? It's an argument you'd have to make in front of the IRS if they decide to ever, audit you around those expenditures overall. So, hey, maybe there's precedent from somebody who tried to do this as well, and they said that is the case. But that one it's a little specific in terms of like whether it is or isn't, and may require someone else to fully say we think it is or we think it's not. There's gray area, and that one definitely falls in the gray area.
Got it. Yeah, it's a little bit tricky. Next one is, if I've been sent a W-9 and I've checked off the box as an individual and was employed as an independent contractor, do I need to file a 1099 in addition to that W-99? No, the employer or your client would have to fill that 1099. The W-9 is just for them to use the information on the 1099, correct?
That's right. Yeah, they just want your EIN or SSN when they go to file a 1099 for you to make sure that everything's matched up right for your information return. It's like a W-2, right? They have your SSN, your social security numbers on your W-2. Your employer gets that information from you on a W-9 or a W-4. So you're doing the same thing with that client. They're just getting that information to make sure they complete the 1099 for you.
And on the same topic of that, is applying for an EIN free, or is there a cost to it?
I think it's generally free. The IRS has some form and site to do that. If there is a cost, I think it's very minor overall. But when I remember doing it, it's been many, many years ago now that I did it. And I don't remember having to pay for anything to do that.
Gotcha. And
others may let me know if I'm wrong there, but I don't believe you had to.
Got it. And then for everyone wondering what the benefit of having the EIN instead is, just you don't have to share your social security number if you're worried about that. So it's just an alternative form that identifies to you that's not your social security. Because I know some people are a little bit iffy of sharing that information to anybody. Yeah. All right, let me see. A few more questions left before we end. Some people are asking for things in the chat, so go right ahead, communicate with each other. For anyone who, I think there's a few people who asked, this technically is, in theory it is recorded, but it's just gonna exist here on our YouTube page. As soon as we end, it'll take like a few minutes to fully upload to the server on YouTube, but it will be here forever at your convenience. We will also publish it as well on the newsletter, things like that, so subscribe to us there. And I mean, I'll probably also send an email follow-up to everyone who RSVP'd specifically on Eventbrite with the link if they did miss out, and they can recap everything so they don't miss out.
You can edit out my 10 minutes of coffee. That would be
Oh, okay. This is a good one in related to vehicles. I bought a car last year and had my taxes done by an accountant. They depreciated the vehicle. How do I know if they depreciate the amounts you can do for 5 years and make sure I process that properly for myself this year?
Yeah, you'll look at the form 4562, and typically it will show whether it was depreciated over 5 years or not. So say a vehicle was $30,000. If I'm going to do the math right, divided by 5, right, 6,000-ish, or if it's around $6,000 that were claimed. Again, it depends on the first year because that assumes you put the vehicle in place January 1st, right? Your depreciation is a little bit lower if you put it in for the mid-year. But if your vehicle is $30,000 and you see depreciation, whether it's on your Schedule C, maybe line 8 or 9, that's $30,000, then you know they fully depreciated it. Otherwise, if it's like 5,000, 6,000 or something left, you know they did it for $5,000-ish. And your tax software, once you enter your prior year depreciation amount, which again is on your Schedule C, or you can find it on the 4562, it will calculate what your depreciation should be then for the next year.
Got it. Cool. All right, for this, I'm not too sure if it's even possible, but is it possible to deduct gifts given to clients? I don't know if they changed that.
We like at TaxAct, for instance, we'll hand out goodies and stuff like that at trade shows and things of that nature as a business that we'll write off just as part of advertising and merchandising and things like that. You see an episode of The Office. I don't know if anybody watched The Office. And Michael Scott was making goodie packages for his clients that he was giving for being clients of the paper company overall. So those types of things would be tax deductible as it relates to, hey, it's kind of like an advertising expense type of thing that you're just trying to keep them for goodwill as a client.
Got it. And then in regards to that, I'm pretty sure the answer to this one, can I write off my Hulu subscription for research? I don't think.
It depends on the job. It depends on the freelance.
If you're a TV writer, maybe.
Yeah, it depends on the freelancer work. That's what it goes back to this ordinary and necessary. If it, depending on your freelancing work job, if there's something you do that is important and you need the Hulu subscription to do this work for research, then the answer would be yes. So it just is going to depend. That goes back to can I write off my haircut for doing my job? Probably not. But if I'm on YouTube all the time or doing that type of thing, I could. So it just depends on the work you're doing.
Got it. And someone added in the comments in regards to the EIN, it is still free. So that is very good to know. Thank you for looking that up while we're multitasking on the stream. Next question I have is, can you deduct home office equipment? Yeah. Computers, things like that. You can even write off a portion of your cell phone bill, a portion of your internet bill. I don't know. Is there an equation for like what percentage it is, or if there's a standard percentage?
Yeah, that one gets tricky. It depends on if you have a separate phone, one used for business, one used for personal, like that's great. You can write out the full one. Otherwise, you have to do some general calculation that says I used my phone for business 20% of the time or 50% or whatever it may be. And then that's how you can deduct off your cell phone if used for both personal and business.
Got it. Someone asked the link for the resource center. I just put it on the ticker down below. It's also in the description on YouTube. So there's a couple links already there. You can easily click and have access to. I'll keep this up for a little bit. Next question is, I purchased a cargo van for my ceramic business with commercial plates. It is my sole vehicle. Can I deduct or depreciate the full value of the vehicle since it is not a passenger vehicle?
Yeah, that one's a good question. So it sounds like, I think I heard you say it was also used for personal. Yeah, obviously, if that's the case right now, you're probably more trying to figure out what percentage you use for business versus what you use for personal. So it could be 80% used for business, 90% used for business. I don't know, whatever it may be. But usually as a commercial van versus like a passenger vehicle, there are different rules that apply for bonus depreciation and things like that. That may be a question, again, for one of our experts to get down into the deeper details of a specific vehicle around depreciation. But unfortunately, I don't have that exact answer for you right now.
Got it. All right, this might be one of the last questions since I don't think there's anything really new coming in, but this is also a very good question. Is there a special line for recording reimbursed expenses? I am often reimbursed for notary and mailing fees, but want to make sure that's not being taxed as income. And I'll also add, can you, I guess, double write it off?
Yeah. Yeah, that's the tricky part. So here's where I go back to my comment about being consistent each year. All right. So if you're going to claim that income for reimbursed expenses as other income on your Schedule C, you want to make sure you write off the exact amount that you're being reimbursed for as an expense on your Schedule C. You may find that if nothing's reported, right, if you didn't get a 1099 MISC or anything like that for that, you may find it's just easier to say, if I was reimbursed for these expenses, I just don't include it on my Schedule C at all. So you kind of have two options to do it. Either just don't include the income and don't include the expenses, or you include the income and include the same expenses on your Schedule C.
Got it. Cool. I think that might be it. That might be the last question. I don't see anything else coming in or anything that we haven't touched on. Yeah, I think that's it. Any final words from you, Mark, at all?
No, I mean, I know it can be challenging, right? Being a freelancer and the work you do and the fact that now you're taking care of all your business needs, right? In the eyes of the IRS, you're a business. It can be challenging and can be difficult, but that's why, TaxAct's here. We're here to help answer those questions. through this webinar, right? We're here to answer those questions with our CPA and EAs and our software. Just know you don't have to go it alone, right? There's people there to help, and that's the point of this. Whether you're new into freelance work, you've been around, is we want to be here to help and get you as many answers as we can to your questions. So appreciate everybody being here.
Thank you so much for taking time of your day to do this. Thank you everyone for joining. As I mentioned several times already, this will exist on our YouTube page indefinitely. All the links, resources that you need or should check out is down below in the description. Definitely take advantage of TaxAct's discount as well. And it is a lot cheaper than TurboTax too. So definitely check that out. And you can also write off as an expense for what you pay at TurboTax. You can write that off on your taxes as well. So definitely check them out. Check out the blog on the Tax Center of all the resources that TaxAct is nice enough to provide for us. Very happy to be partnered with them for this, helping our members and everything of the like. I'm pretty sure that's it. Subscribe to our newsletter. Check us out at freelancersunion.org. And you can also check out our co-working space, Freelancers Hub in Brooklyn. We're located in Industry City. You can check out all of our other upcoming events as well, freelancershub.nyc. And that's pretty much it. Thank you, everyone. Hope you have a wonderful day. Take care, everybody.
Bye.